Hi everybody, welcome to another video of what's moving the markets. Today, as promised, we are going to not just look at US markets, but we are going to see what possible implications could be there for the global markets due to the Trumponomics 2.0. So we have been discussing what the new office of Mr. Trump, President Trump, is going to mean for the US market. But today we're going to be looking at what it means for the global markets. And we will again rediscuss what it means for the US markets as well, because it is just so important that I want to keep insisting that you very carefully fine tune your exposure, because there are clear winners and losers in terms of sectors coming out over here. And similarly, for global markets, also, we will be discussing who are the winners, right? And within the winners, which sectors in those countries are expected to win. As always, just a disclaimer, this is a casual series, not investment advice. Please do your own due diligence before taking investment decisions. Let's get started. So, what's the policy overview? Trumponomics 2.0. There's deregulation. We talked about financial services, that reduced capital requirements will obviously enable banks to do share buybacks, and that will push up the share prices, right? So financial services definitely expected to benefit from the deregulation. The same goes for your energy sector. Now today we're going to get into a little bit more detail with respect to clean energy and renewable energy or alternative energy, because this deregulation is expected to boost your alternative energy sector, combined with the energy independence drive. So one of the top agendas on the Trump policy overview is that US energy independence, which means pure traditional energy like your fossil fuels. Priority will be given to sweet crude, which refining, which is basically your shale, which comes out of the US. So that's sweet crude, low sulfur content, and refining of that sweet crude, so that import of sour crude is reduced, and the dependency on imported sour crude is eliminated. But what you have to keep in mind that the elimination of the dependence on imported energy can be done by obviously increasing the local fossil fuel production and refinement, but also it can be done by boosting your alternative energy, such as your clean energy coming from nuclear and your renewable sources such as solar and wind. So, as far as the energy independence policy is concerned, that doesn't necessarily mean that it's bad for renewables and good for fossil. It means it is good for fossil within the sweet crude space, which is the shale space, but it also is good for clean and renewable sectors as far as they are domestically done in the US, right? So the higher perspective on energy independence is that it has to be done domestically. It doesn't have to be fossil fuel. It can be renewable. It can be clean nuclear. It just has to be done domestically. So that's the key thing as far as energy is concerned, and we will be getting into a little bit more discussion about that shortly. The other main thing which we're going to be discussing is tariffs, and which countries are coming out or expected to come out as winners as the US imposes tariffs on China. And we will be discussing three big winners here, which is Mexico, Vietnam, and India, and which sectors within those countries are expected to benefit, right? And even some companies. So within the sectors, what companies could be possible choices? Or if you want to take a broad, diversified exposure, then what type of ETFs can you use to get exposure into countries like Vietnam, India, etc.? So we'll be discussing all of that. Of course, US itself, there are sectors which we have discussed many times, which are expected to benefit not just because of the tax cut, but overall because of the higher inflation. So, for example, we talked about financial services not only benefiting because of the deregulation, but also because your inflation is expected to stay high. And why is inflation expected to stay high? Because, first of all, there is a tightening of the labor market, right? You're tightening the regulations on the labor market, which means labor supply will be less. The demand is already there. The economy is very strong. We saw the Black Friday sales, which is through the roof. Then you've got your new growth oriented policies expected to come in, which means the demand side will stay strong, right? Your labor supply will stay tight, which means wage inflation, right? Plus demand pull price inflation, plus because of the tariffs you will have increase in prices of imported products, and all that means interest rates will stay higher, which is obviously good for financial services, but not so good for companies which are highly leveraged. So we will be looking at all of that as well. But in addition to the winners and losers within the US market, we will also be looking at what happens internationally as China and Euro loses because they face challenges due to trade and geopolitical shifts. Vietnam, Mexico, and India are expected to win. And then which sectors and then which companies as well, right? So we'll be discussing all of this. So let's get started. First, let's start with Mexico. So the key sector here is automobiles. And why is that? So you've got a lot of imported Chinese products coming in, but as the tariffs come on top of those Chinese imports, what happens is that one way to kind of bypass this is to bring that unfinished product to Mexico, finish it in Mexico, and then import it into the US, right? So that definitely helps with lowering the taxes and the duties on it. And this is done because of the United States Mexico Canada agreement. And I know it's kind of a loophole, right? And the US government is not going to let this pass. They're definitely going to try and control this by maybe increasing tariffs on Mexico, but it's still not going to be as much as China. So even though the US government will try to develop the local manufacturing industry in Detroit, but it's easier said than done. So even though China will go down and Detroit will come up a little bit, but one of the biggest beneficiaries in this entire situation is going to be the automobile manufacturing industry in Mexico. So you could look at that space. Also applicable for electronics in Mexico as well. Next is Vietnam. So again, as the manufacturing operations will have to move away from China because of the tariffs, one of the best alternatives is Vietnam, and electronics manufacturing is definitely very sweetly placed within that, but also you can have textiles and value-added textiles like apparel looking to benefit from this as well. So you could look into that sector. For India, it's more tech and pharma, right? So in tech, you could look at companies like Infosys and Tata Consulting Services, right? Pharmaceutical has a lot of good options. And further down in the video, I will be showing you some broad diversified ETFs that you can use to get exposure on Vietnam and India as well if you don't want to take focused company specific exposure. Now I want to shift gears a little bit and talk about alternative energy. Now I was telling you the main thing is energy independence, right? US does not want dependence on imported energy anymore. Now, the solution for that is obviously local crude, which is sweet crude, and refining of sweet crude. But also, you could have clean energy coming in from nuclear and renewable energy coming in from solar and wind, etc. So we'll move to solar and wind next. Let's talk about clean energy, and I am really going to emphasize on this for you. Please look into this, right? Please look into SMRs and what Google is doing and what Microsoft is doing with their data centers, setting up small modular reactors. It's like they're like small nuclear power plants, right, next to the data center to power the data center, which obviously then powers the AI, and then that leads to cash inflows from the applications that they build on top of those large language models. So please don't take this lightly. This is a very interesting space to be in, with the relaxed licensing requirement for nuclear reactors. So where is all of this coming from? It is coming from deregulation. Again, Trumponomics 2.0 means deregulation for the financial services sector, but also for the alternative energy sector, in line with US energy independence, which means it gives a lot more free hand to people wanting to invest in clean energy, people wanting to invest in renewable energy, right? So alternative energy. And who is likely to take advantage of this? Microsoft, Google, companies that are having these data centers. They need clean power, reliable power, and they can get that through SMR, small modular reactors, which will obviously power their data centers, which again powers the large language models, that then powers the application, which brings in cash flows, right? So very, very interesting space to watch. Next is your renewable sector, right? So in addition to solar, you've got wind, and I have given you some recommendations, but then again, it's not investment advice. This is just there to give you some examples that what type of players you could look into, right? So for example, Tesla, through its city subsidiary, could scale up their solar operations, or you could see something like First Solar, which again is sweetly placed. And then please remember, when you talk about renewables, it's not the same like nuclear, because nuclear, it's a steady energy generation, right? Generation, consumption in the data center, steady generation, steady consumption. But wind and solar, the generation is up and down as the wind or solar changes, right? Because during the day the sun is out, and vice versa. So you need to store it. So when you talk about renewables, you need batteries, and obviously locally placed battery lithium mining companies are expected to benefit from this rising demand for lithium. So you could look into ALB for that. Right. So what's the conclusion, guys? Number one, we talked about Mexico, Vietnam, India benefiting because of the US China trade tensions. And what sectors did we say? In Mexico, we said auto, electronics. In Vietnam, I gave you sectors. In India, I gave you sectors as well. And as promised, I'm giving you some ETFs that you could look into for a diversified exposure into these countries, as the entire economies benefit as US China trade tensions cause a strategic realignment of global supply chains, right? Next, we talked about what deregulation means for alternative energy. And I said, look into Google and Microsoft setting up small nuclear power plants called SMRs and how that could help them. We also talked about renewable energy, in which I gave you examples of Tesla and First Solar. And I also gave you an example of a lithium mining company that you can look into. And before I close, I'm just going to do a recap of the past few videos that we've done for the US economy and the US markets, right? So what have we been saying? Tariffs and infrastructure spending is going to push inflation. And the tighter labor market is going to further push inflation. And just look at the Black Friday sales, right? Federal Reserve might even increase the interest rate. Listen, I can't believe I'm saying this, right? I mean, this is on the cards now. So you can look at the Fed Watch tool, right? It shows you what is the probability of a rate hike, what the market sees. So this is something that is back on the table. You might see higher interest rates, not just higher interest rates, but they might even go back up a little bit. And then obviously the dollar remains strong because of all of this. So what does that mean for the different sectors within the US market? Financials very sweetly placed. We talked about this many times. They're expected to benefit both from the deregulation and the higher interest rate. We talked about energy, but I have told you many times. Let me tell you again, energy has lots of different players. Please stay away from the refineries which are refining imported sour crude. The government policy is energy independence. They don't want imported energy. They want local energy. So that could be sweet crude, shale. So if there's a company which is producing sweet crude locally in the US or refining it, that is sweetly placed, right? Number two, alternative energies can be there as well, right? So you could look at companies such as First Solar, etc. Then with the infrastructure spending, we talked about industrials which are sweetly placed like Caterpillar and Deere. And in technology, I have been telling you application layer, so Microsoft, Google, and now with the biggest shortfall that they had in terms of energy for their data centers is being solved through something called SMR. So please look into that as well. So what's the big picture here? The big picture is there are opportunities and there are challenges, right? You have to safeguard against the challenges. So you might be facing inflationary pressures. You can hedge against those through exposure to financials and commodities. Even though we're talking about a stronger dollar, but I would still say gold is something that you should have in your exposure, and not gold as in speculating on gold price, but gold mining companies. Because even if gold price doesn't go up from here, even if it stays high, let's say around 2,600, gold mining companies which let's say have a cost of maybe mining gold for less than 1,700, so there is still a pretty good profit margin for them, right? So if you take exposure into these gold mining companies, they pay you good dividends. They have solid stable cash flows. There is a solid stable demand from central banks of China and Russia and India and many other countries for gold, right? As the global geopolitics is getting more into a multipolar world. So there is partial de-dollarization. So definitely you can look into gold mining stocks like Barrick Gold, where the ticker is gold, or Newmont, where the ticker is NEM. Financials we've discussed many times as well. Plus technological innovation. I told you about Microsoft, Google, right, benefiting from the clean energy deregulation, and other players within the clean energy deregulation within the alternative energy, such as First Solar and Tesla because of its subsidiary, and infrastructure investment. And we talked about Caterpillar here, we talked about Deere here, right? So all of those companies you should look into. And of course the Mexico, Vietnam and India discussion as well. So as always, if you found it useful, please like, share and subscribe, leave your comments, and looking forward to seeing you next week. Thank you.